This is the FCTO Daily Forex News Report for the 3rd of June 2013. Asian equities opened the week broadly lower following the late sell-off in the Dow last week, with the Nikkei dropping over 200 points. Better than expected Chinese manufacturing data released over the weekend provided little support to sentiments. In currency markets, most pairs are staying in range for the moment. The question on when the Fed will scale back asset purchases will remain a major theme in the markets this week, and a number of important economic data releases from the US will likely drive some volatility. Data to be watched includes ISM manufacturing today, ISM services on Wednesday, and non-farm payroll on Friday. Meanwhile, the Reserve Bank of Australia rate decision on Tuesday and the European Central Bank and Bank of England rate decisions on Thursday will also be watched. The official manufacturing PMI released from China saw unexpected improvement to 50.8 in May from 50.6 versus expectations of a fall to 49.9. The details showed improvements in new orders and new export orders. The slight pickup in the reading showed signs of a stabilizing in the Chinese economy, but it's expected that GDP growth will slow down further ahead. Indeed, the International Monetary Fund slashed China's growth projection in 2013 to 7.75%, down from a prior forecast of 8%. The Organization for Economic Cooperation and Development also lowered China's growth projection to 7.8%, down from a prior forecast of 8.5%. In Europe, the ZEW President Forex noted that the European Central Bank's expectation of a gradual recovery in the second half of 2013 is uncertain. He didn't see a recovery in the Eurozone in its own right. Meanwhile, he noted that recovery in the US and growth in Asia won't be able to generate a demand pull in Europe. Regarding negative deposit rates, Forex said it's not a step to be taken now, as the signal would be very negative. The ECB will meet later this week and is widely expected to stand pat. Focuses will be on Draghi's comments on negative deposit rates as well as new economic projections. Swiss National Bank President Jordan said that the pressure on the Swiss franc has weakened, but at current levels is still highly valued. He said that the central bank would not exclude any measures to ensure appropriate monetary conditions. The Euro-Swiss franc floor gave Swiss companies a certain amount of security in planning, but he warned it's still a big challenge to deal with the exchange rate. Regarding banks, he said SMB has no responsibility to save them when they go insolvent. On the data front, Japan capital spending dropped 3.9% in Q1, less than expected fall of 5.5%. Australian retail sales rose less than expected by 0.2% month-on-month in April. China official PMI released over the weekend improved to 50.8 in May, but HSBC PMI manufacturing was revised down to 49.2. PMI data will be a major focus today. Swiss SVME PMI is expected to improve to 50.9 in May. Eurozone PMI manufacturing revision will be released. UK PMI manufacturing is expected to improve to 50.1 in May. From the US, ISM manufacturing is expected to drop slightly to 50.5 in May. For all the news affecting the markets throughout the day and throughout the week, join us at forexcurrencytradingonline.co.uk. That's forexcurrencytradingonline.co.uk.